So dollar index is lower here this morning, guys, which is good for my euro dollar long idea. So I am long the euro. We'll get to that in just a second. But we didn't quite get to this 38.2% retracement. So let me just tighten up my levels here. So you can see we did not quite get to this 38.2% retracement zone before price already started to sell off. Now, to get granular with this, right? What I'd like to see would be to see some break of this structure here, right? That's a pretty significant level that you can see. We put in this low, we came in, put in a higher low. And some people might say, well, isn't this an inverted head and shoulders? I would cede that to you if you get this move. If you get this move, then yes, I would call that an inverted head and shoulders, and price action would be flipped bullish. But what have we actually done here? We've just consolidated, right? Look at what price has done. It came down heavy, put in a low, and I only would consider this a higher low if it was followed by a significant higher high. And we did wick up into this area, but we didn't close decisively above the previous high. So I would give this kind of just a consolidation phase where we currently are with the US dollar. Is that bullish or bearish? Well, price action wise, I would just say it's mixed. But fundamentally speaking, taking a look at our economic surprise meter, change the name up on this. I feel like it's more intuitive with this name. The economic surprise meters will show you how surprising the economic data has been, positive or negative, for your favorite currencies. So if you're a currency trader, this one's for you. The eco surprise meter, like if we take a look at the US dollar, you can see that it has been surprising to the downside. Like economic data has been downbeat. It's been less than impressive. The UK has been impressive compared to forecasts. Europe's been mixed. Australia's been surprising to the upside. New Zealand's been surprising to the upside. Canada's been surprising to the downside, right? That's the way to read this map. And so it's not based on price action, right? This is not saying, oh, the US dollar is the strongest. I know everybody sees those, metrics. I wanted to look at, and, Frank from our team designed this. He did a great job. We wanted to look at economic surprise, positive or negative, for different currencies. So when we look at this, we say, oh, the US dollar, let's talk about our weak points here of the majors. Canada, the Canadian dollar looks a bit weak compared to forecast. The Swiss franc looks a little bit weak compared to forecast. Japanese yen, borderline weak. But let's keep stuff in the red. So here's our in the red, in the red, in the red. What about the blues? Pound. Euros mixed, so we won't touch that one. New Zealand, Australia. So how do we read this? Well, we say the pound against other currencies looks strong, and we could actually marry this up, right? So what this would tell me, in a nutshell, I could basically, as an FX trader, I'll tell you this. If I traded only FX, this is pretty much what I needed. Like right here, this is all I need for fundamentals. I don't even have to look at the data. Now, I will look at the data because that's what I do on this channel. But I'm telling you, if I was just a retired dude who traded FX and didn't really care to look at this stuff for very many hours per day like I do currently, I would look at the economic surprise meter, and that's pretty much all I would need for FX. I would say the UK, Australia, and New Zealand, their economic data has been surprising to the upside, so I'm going to have a bullish lean towards those particular currencies. And for the bears, so I would say pound versus dollar. I would say pound versus Canadian dollar. I would prefer to take the winner in that. Pound versus Swiss franc. I would say Australian dollar versus Swiss franc, long bias. Aussie CAD, I'd be long biased. Aussie dollar, right? AUD, USD. See how we're doing that? We're just crossing strong versus weak bases based on economic surprise. Does that make sense? I don't know if that resonated or not. So do me a favor. If that made sense, type yes or put a 1 in the chat. I just want to make sure that what I just said didn't sound like super confusing, I do sometimes rely on the audience to let me know that the way I express an opinion or a thought actually resonates or actually makes sense, because if it's confusing, I would rather know so I can explain it better next time. So again, we're just looking at the economic heat maps basically in summary. Right now, the US has been pretty downbeat. Last week, we had a lot of jobs data that was not super impressive. Now, the NFP report was good. Like, don't get me wrong, that was strong for the dollar. But then that's where it ends, right? ADP was a miss. Job openings were a miss. Jobless claims were a miss. Wage growth was a miss. These are weak things for the US dollar.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
There's a couple of things that is concerning me. Was over the weekend I heard that, not that it matters, but Trump wanted to put on 100% tariffs on foreign-made films, and that could be both a blow to the film industry, both I would say locally and internationally. I have to see how that one plays out. That's still, just to calm you down, that doesn't really drive the markets today, I would argue, but it's pretty funny. But yeah, and then Alcatraz. Just gonna say that. In that situation, we had a Bank of Japan meeting on Thursday last week, as far as I remember. And more than anything else, they were like, "Well, we're not going to raise any interest rate anytime soon." So we had a bit of a bearish outlook, or bearish reaction on the yen, and yen is by COT. Before this, market was still very long. So just have that in mind, that this data is from before that meeting. And secondly, that we are still very short Swissy. And not for the obvious reasons, other than they are doing absolutely horrible economically. You know, I failed astrology in class, Ellen. Oh, okay. Okay. If you make me laugh too much, I think I have an infection or something, because like it hurts. just laugh a little. Yeah, I'm definitely favorite on A1 team after James Allen, Nick, Tom, Marco, and Chandler. So I'm last. Thank you. That makes it hurt a bit less. Okay. So, you won. So to me, right. So what did I say? Well, it was supposed to be yen pairs. So, okay, we have arguably a bit of a bullish New Zealand yen, a bit of a bullish Swiss yen, a bit of a bullish CAD yen, and a bit of a bullish Aussie yen at the moment. And I have talked about the opposing thing for quite some time. I've said, hold on, we have risk-off environment going into May. And we haven't really seen that yet. We have gone higher. We have risen. We have been risk-on ever so slightly. And I don't know where I saw it, but somebody was said that they were in a dollar Swissy trade. And I was wondering, what do you do, right? And I think it's pretty easy for me to say. I feel like Nick was a part of it, but also in an idea that it doesn't really matter. what your entry version is, as long as your foundation of why you're doing what you're doing, right? So, what's the problem with the yen move here? And that's why I am going to advocate for a specific direction. But in this, at the moment, I would argue that it's pretty much both ways. You can say seasonality is strong, we're going to go lower. You're going to say fundamentally we are going to go lower, but on the yen pair. Or you can say that Bank of Japan said, well, we're not going to go anywhere. We're not going to, because the reason for why we would why we would buy yen is because there is eventually going to come a higher interest rate. But currently, they don't seem to be in that team. Second of all, I just want to double check that before I talk anything more. Did something just happen? I feel like the yen pairs are falling a bit more than I like. PMI 50.8. Okay. Okay. So there is a PMI there. Didn't see. Gold has been so dodgy. Yeah, of course. I can't trade gold on Webull as a USA client. Anyone helping me with that? I cannot. I have no clue. Okay. So that is S&P Global open services in 7 minutes. S&P Global is the one that I really want you guys to be following. The other one, which is it stands. It's completely. S&P Global is the one that you're supposed to follow. That's the most important. That is the one that is closest relationship to GDP, because this explains 90% of GDP normally, and it's currently going down to 50. That should lead to, if anything else, a dollar weakness. That should lead to euro dollar going higher, Australian dollar going, New Zealand dollar going higher. Okay, we are good so far. Okay, but it also leads to yen strength. So back to my theory here. So what I'm saying is, it doesn't really matter the direction. And if you have been bearish on the yen pairs, you have had your chance here, and you may have had your chance here, but you get kicked out. Now, this is all me and all technical analysis, okay? I will be worried as a buyer if we break a technical higher low. So this currently is okay. That's all great. Okay? So it doesn't really matter what you're thinking, because that should be your jumping board. You know, when you jump as a swim, boom, higher, that should be your bounce. Or as a seller, you're thinking, we break. Okay? Technical analysis done 101. No trend lines involved, no EMAs involved, no ICT, nothing. But the strongest force is always going to be your brain. So, in this case, and what I mean by that is, what is your analysis? What is your ability to say, okay, what is your ability to differentiate fundamentally, seasonally, sentiment, and now the risk of Trump sending the market down, sending it back up again? And I would argue, as it stands today, that we are more than likely to fall on Aussie yen, and I think that's going to be the case, and that's going to be the one that is not going to work out in the end. And now you can come back on a Monday next week and say, hey, haha, you're right, you're wrong.
Just had a couple levels here on SPX this morning. We gapped lower. I think the market's going to be pretty range bound today, maybe quiet, maybe a bit of a sell-off. We did have 9 consecutive closes higher. So if we go into the futures market, we had a lot of green candles in a row, starting with this April 22nd. 1, 2, 3, 4, 5, 6, 7, 8, 9 candles in a row. First time in 20 years that we've had that type of consecutive run. So was expecting a bit of a pullback. Friday before the market closed, I did put on a synthetic short on MES, which was I bought a put at 5,700, sold a call at 5,700, and ended up grabbing about 30 points last night on that trade. I'm out of it. It's pretty early. I just didn't want to take the upside risk, but it cooperated right away, so I grabbed a few bucks there. And then this morning jumped in and did some selling on SPX. Worked out pretty nicely in the first about 30 minutes of trading. Maybe it's all eyes on the Fed for this week. We did have ISM numbers coming out this morning. It was ISM services for the U.S. came in slightly better. 50.2 expected. Previous 50.8 came in 51.6. Tomorrow, no major news from what I can see. Employment news coming out of New Zealand. After that's actually Wednesday's trading day. And then Wednesday, we have the Fed with rate decision, with press conference. Probabilities have shifted a bit. So Jerome Powell and co. likely pausing through May, looking like they're going to pause through June, and possibly a cut starting in July. A big narrative shift over the last week or so. We're staring at this market. We're back above. Let me go to SPX here. So we're back above Liberation Day levels, right? So here's our, support. We had our flush down Mag 7 rotation, 2-week pullback, and it was the flush lower. There's your Liberation Day announcement. So the market is safely back above Liberation Day announcements. Now that's the stock market, okay? The issue that I have is that, stock market's above Liberation Day levels. That's fine. I don't think it'd be difficult to see if we're going to form a pattern here. Left shoulder, head to neckline. This might still be working out a neckline. It might also have this could be the intermediate top and we pull back a little bit. That could be our neckline. So I don't think we're going to be, blindsided by oh, wow, I can't believe this bullish move. It's we totally can. If we pull back into a right shoulder, I sometimes you got to give the market a lot of credit for being as technically obedient as it is. This was a previous all-time high that became the technical support. That was a bottom in all this chaos, right? If the market comes up here and forms a neckline, well, that was resistance on the right-hand side of the trend line. That was resistance there. It was resistance that became support right here. So if the market pulls back, is it possible we pull back and just use the backside of the trend line and some gaps to then offer up the right shoulder? Maybe, So if it's left shoulder, head to neckline, pull back for right shoulder, find a gap in here, high or low, measure that move. I'd probably measure symmetry, and I'd be a little bit more aggressive adding trades into, another push to the upside to see if we actually can get back to 6,000 or 6,100. I'm still cautious to the downside. I still have hedges to the downside, but now I'm kind of anxiously waiting to see if I can get a dip. Most of what I'll be doing here the next couple of weeks, probably the next 30 to 60 days, is focused on just selling calls, either stocks that I own or looking at some positions where I might just buy the stock, sell a call, and sell an in-the-money call and try to grab a couple of bucks and generate some income. I don't know if the market's going to have a nasty week if we go to the weekly candles. We've had 1, 2, 3 out of 4 weeks green, and it's obviously been a big recovery week since the April 7th to the 9th. Right, so the 7th was the bottom, the 9th was the tariff pause, and we've had some pretty strong upside since. So anyway, in the bigger picture, the integrity of the bull market is still there, right? We still have a bull market. 200 moving average on the weekly time frame. All this was supported even through the 2022 bear market, and even the flush out we had here. It's offering a lot of support. I'll continue to say this: nothing good's going to come below. If we break 4,800 convincingly, nothing good's going to happen. But if we can maintain, basically this being the floor for the year, then it's possible that the market might be noisy. But I would say the market's going to do everything it can to kind of grind higher. So, to me, that's a little bit easier, is at least have hopefully a clearer path to all-time highs. I just hope we have opportunities to kind of scoop up some dips, and we might have some noise along the way. But I would say that for right now, this market is looking a little bit more poised to try to stay bullish. It's going to slow down, though. I don't think the volatility is going to be nearly as chaotic and whipsaw and kind of parabolic as it was. we could still have elevated volatility, but I would say not so much. The one thing that I am concerned about, and I think we need to pay attention to, is the 10-year yield, because with the Fed changing their probabilities here, this is a pause. Okay, this is a pause for this week, Wednesday, so about a 97% chance Fed does nothing. This is a pause, about a 68% chance they do nothing in June, and then the first rate cut would possibly be in July. Now, why would the Fed cut rates if the market is on its way back to all-time highs? Why? Why is there a need? Is there a need for the Fed to cut rates at all? Do we have to cut rates? If we're sitting at all-time highs with a resilient economy, why the heck does the Fed cut rates? Is it the liquidity air pocket? Is it the refinancing? Well, I mean, I understand why they would want to cut rates to lower the debt cost, right? Servicing debt at 4% or 3.5% or low threes is a lot different than 4.25%, 4.5%. But the world has to refinance on 10-year yields, roughly. So 10 to 20-year yields. If you want to buy a car, you want to buy a home. All of more interesting currency pairs right now. Aussie CAD still doing his thing. I didn't get the pullback that I wanted. I was hoping we'd have a kind of a 50618 pullback in here. I'm not really getting it, unfortunately, but that's okay. We're filling the pocket. I think Aussie CAD, if it continues up, fine. Watch for this pattern, though. We have a move here, a little fake out to the upside. We pull back. Two things. Either this is the bottom and we go back up to hit this high around 91.50, or we have a move where it goes slightly lower. So just be a high, low, lower, high, lower, low. I'd still like to buy the dip on Aussie CAD to swing this thing back up into 91.50. So I'm just going to wait and see if I get a pullback. Otherwise, if it gets to these highs, I'll take some profit. Aussie Swiss looking better. Certainly room to get up to like 5,500. If it is going to be if it comes back down here for like a double bottom, that's fine. I'll trade the double bottom. That could be a carved out low. This could be a move up here, a third wave. As I keep mentioning, like I'm just watching for, do I have what looks to be a pretty safe bottoming pattern to trade? And I will position accordingly for it. Aussie yen, still getting that risk on trade. I'd mentioned watch those August 5th lows from last year. And if you were a buyer off those lows, it's rewarding pretty nicely. Long Aussie New Zealand, Aussie dollar still waiting. CAD Swiss, oil's dropping a little bit. I'm looking to see if we do come back down to lows, are we equal lows? Are we divergent lows? I'm still looking for a bottoming pattern. Still going to hang on to these trades. CAD yen, kind of the same thing. Watch this level. This one's holding structurally pretty nice. So we could be in some chop, but if this ends up breaking, up, that could be good. If we hold this level, I still think the upside looks pretty promising compared to the risk. But I wouldn't fight this. I mean, if we're going to make a severe break to the downside and the Japanese yen is making a basket run, don't fight this. So if it holds the lows, a lot of upside potential. If it breaks the lows, I'd want to get out quickly. Swiss yen, no trade. Euro Aussie did not pull back like I wanted. I was looking for a swing trade, never offered it. It's just sliding lower. I'm out. Euro CAD, I still like the sell highs in here. I mean, it's really not looking awful. I mean, if you were to sell the Euro CAD here and it gets back to the highs, I'd still sell this thing. Even if this is this could be a big rising wedge that ends up breaking down. So, I mean, be patient if you like the trade. But I still think we're coming back to like 5,400 on the Euro CAD. Euro Swiss, pretty strong support at 92.25. Actively looking for a bottoming pattern. Euro pounds, no trade. Euro yen, no trade. Euro New Zealand, similar to Euro Aussie, just kind of sliding lower. I didn't get the pullback that I wanted. Euro dollar, I'm sure there's some traders still interested. I didn't mind taking a short position here. If it was short 1 and then short 2, I still think this pulls back a little bit more. At least 30% or 38% between 111.50 and 110.50. If I am short euro dollar, I would be out of the trade here with at least a stop loss, trapping profits. And if it goes deeper, that's fine. But otherwise, I think once we have a bit of a pullback on euro dollar, that's a bit of a pullback on the dollar index. Euro dollar comes back down to these levels. I still think we go higher. Bank holiday today, no. It's Cinco de Mayo, so everyone's out on the beach having margaritas. Pound Aussie also, didn't get the pullback that I wanted. I was looking for that 50618. It didn't pull back deep enough. Pound CAD, I'd stay out of that one. Pound Swiss, offering a bit of a swing here. So, maybe this area for a position 1, bottoms for position 2, but watching, this pocket for profit or this pocket for profit. If you want to wait for confirmation, just wait for a trend line break. But I think a little small trades, dollar cost averaging could get you some profit into the 12 and 1300 targets. Pound yen, no trade. Pound New Zealand sliding lower, no trade. Pound dollar, possibly a topping, bit of a topping pattern here. Maybe a small trade can kind of play the chop and see if this actually does offer a bit more of a retracement. I like euro dollar better. Full transparency, like euro dollar better than pound dollar right now. New Zealand CAD, I'm still long. New Zealand Swiss, I'm still long. New Zealand yen, if you bought the August 5th dip, it's looking pretty good for a couple hundred pips. New Zealand dollar, I'd still like to see a pullback. Either this is sideways for some type of like flag pattern, or it's rare to see a pair like this just have a no pullback position. So I'd like to see maybe a little bit more of a consolidation zone, but previous resistance becomes support. We trade into some open space, and let's see if we can get to like 63.50 on New Zealand dollar. Dip wise, look, draw fib. There's a low, there's a high. Look at filling in some levels in here. Stop loss would be below this swing. As long as we maintain a higher low, a higher high to a higher high, a swing to a third or fifth wave would be my profit target. That's all based on dollar, dollar weakness. Dollar CAD, super slow and super choppy. I would just stay out of dollar CAD in all honesty. Nothing gets me excited about this indecisive zone. I would say if dollar CAD continues to slide lower, then sure, let's look at this area to buy low. If we convincingly make a run, back into this space above 3,800, 3,900, then perhaps that's a bottom and we put in another rally to the upside. So it just has to be clear. Like right now, this is kind of no man's land on the dollar CAD. I like buying it low. I wouldn't mind selling it high. It's going to just take a little bit more, price action for me to be convinced I want to take a trade at these current levels. Dollar Swiss, still looking at a pocket fill around 87.70, but actively looking for a bottoming formation. And then dollar yen, bottom's going to feel a little tricky, so be careful. But as long as we don't make like a convincing ATR break below, I think this is still, maybe heading higher and higher and higher. Just a grind, just a bit of a slow grind to the upside on dollar yen. And then we'll see if this level holds, like 149, support resistance. That could be a topping point. We could still slide lower, but I don't think anybody would be super surprised to see the dollar yen just stay in this big range. So it looks like a better trade to be buying right now, as long as price doesn't damage that low. Then there's room to get back into the chop zone and, potentially even come all the way back up to this like 155, 156 zone. But if you're long dollar yen right now, I like the 140, kind of the 148 to 149 zone would be protect some profit. Okay. Any other charts, questions? We have earnings this week. I've got a screenshot. Let me take a look here. Earnings for the week. So some notables. We officially have kind of Mag 7 out of the way now. We have him and hers with earnings after market today. I did close up a nice trade on HIMS. I had a diagonal spread. It was up to 42.27. I had a trade last week that I closed out for like almost $23. I think I paid $17 for it. I closed it out for $23. So that was pretty nice. And I still have some ratio spreads, a 25 by 20. This is a pretty good looking growth stock in my opinion. Fundamentally, it's due to be way higher. It kind of was a nuts. Like I wasn't that interested in the stock until we were back down to the 200 moving average. So, and what's funny is during the bear market, it's like I bought this stock at like $5, and it's been up as high as $72. So did I take that profit? Of course not. I took a $5 trade and turned it into $12, $13, $14. Huge profit. I was happy with that. But now that it's a little bit more mainstream, it's making a nice little run. I think this could offer up some nice dip opportunities to stay kind of in growth mode. But I wouldn't mind owning shares, below 25 bucks either.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.